If you're in a relationship and you split the bills 50-50, you probably should not buy a house. As a loan officer, people come to me all the time and ask me about getting approved for a house. And sometimes what they'll say to me is, hey, we split the bills 50-50, so we want to make sure we can each afford 50% of the mortgage payment. There's a couple things here like that I always think, because it's very, very rarely successful. The first thing is that lenders don't look at it that way. So we look at income and debt for the couple, and we're not really that concerned about who has what debt or who has what income. It's all in both buckets, and that's what we pre-approve you for. But in most cases, what I find is that there's a disparity in income. One of the partners makes more money than the other one, and therefore they can afford a much larger amount on a mortgage. So if you want to purchase a house and you plan on 50-50 splitting the mortgage, what you really have to do is you have to limit your qualification to the lower person's income, because in the end of the day, if they are not going to be able to afford the same 50% payment as the higher income, and it's never going to work in the long run. Successful couples typically pool their money and attack their debt together. When you keep it separate like that, it normally doesn't work unless somebody just says, hey, I make so much more income, I'm going to pay 100% of the mortgage, and you pay for the groceries or something. But actually splitting bills doesn't really ever work in a successful way when it comes to buying a house.